Hi, everyone. Thank you for joining me here at Real Estate After Death, where I'm joined with my incredible lawyer. Hi, Raluca. How are you?
Hi, Chaunyce. Thank you for having me.
Of course. Will you tell us what do you do?
So my name is Raluca Soika, and I am the principal of RMS Estates Law. I practice wills and estates and real estate law in the Greater Toronto area.
Thank you for joining us here and thank you for all your expertise. Today, we are going to be discussing what happens when someone passes away and has a property with a mortgage. So, Raluca, tell us what happens.
When somebody passes away and they own property, some form of ownership, whether it's sole, tenants in common, or joint tenants, you can't really make any kind of transfers on title, such as transfer of title of any kind, without thinking about the mortgage first. So, in sole ownership and tenants in common, that those are types of property ownership. The mortgage needs to be serviced first before the deceased share gets transferred. And in sole ownership, that often means that the property needs to be sold, the mortgage paid, and then the rest goes to the beneficiaries. If the deceased owned property as tenants in common with somebody else, so there was no right of survivorship on title, it means that their share would have been distributed in accordance with their will or in accordance with Succession Law Reform Act. Executor still needs to figure out a way how to deal with the mortgage first. So there's collaboration with the other tenant in common because maybe now the property is sold together. Both sides decide to sell the property and pay off the mortgage and distribute between the surviving tenant, and then the deceased share goes according to their will or in accordance with Succession Law Reform Act. So the mortgage definitely needs to be serviced in these two scenarios. But there is a third scenario, which is joint owner, where the survivor, who's oftentimes a spouse or another family member, they advise the bank that this person who was on title passes away. And oftentimes the bank allows them to keep the mortgage and to register a survivorship application whereby the survivor gets title fully, but the mortgage is still in their name and the deceased name. And oftentimes banks will approve this, but of course they need to be consulted first. And then the mortgage will just be allowed to run its course. And then at the end of the term, it needs to be serviced. So at that point, whoever is on title fully will either need to refinance the property and pay off this old mortgage and refinance just in their name, or they need to sell the property and pay off this debt, or just pay it off if they just have the money to pay off the mortgage, because sometimes the mortgage isn't that high and they can just afford to pay it off.
So, would you say it's typically in the joint tenancy where the lender will typically let you keep the property with the mortgage still on the property, and they'll be like, you're good to apply to maintain the property, and then you have to, after the term is done, you would have to figure out what you do with that mortgage. But in tenants in common, you kind of have to rectify the mortgage first and then go on.
Yes, because the reason is because in tenants in common, it's it's going through a will. The property will, the half or whatever the person owned flows through the will, and the estate needs to be administered. Unless if the beneficiaries, I mean, if the other person on title is a family member who happens to be the only beneficiary in the will, they may choose to keep this mortgage going with the acceptance of the bank, of course. But if it's a different person, let's say an investor, and then the person who passed away, they were investors together, their share flows through their will to their children, let's say, the children may not want to wait 3 years for the term of this mortgage to run out, because they want to receive their share now of the property. And also you get into other issues like it automatically vests into beneficiaries if a property is kept more than 3 years. So you run into all kinds of issues with the more time passes. So that's why, for the most part, the tenants in common mostly want to deal with the property as soon as possible, the mortgage, pardon me, as soon as possible after the person's death, because of all these external players, like the beneficiaries asking for it, or they decide it's not worth it to allow the vesting to occur, etc. So
Got it. That's a good point that in tenants in common, if one of them dies, it's going through a will. So you have to actually execute what's in the will and discharge the property if that's what it calls for. So great point.
yes, and that's why when investors take title to a property, the lawyer would more often than not recommend that they have some sort of agreement in place which addresses what happens on the death of one of them.
Mhm.
Does the survivor, does the other tenant in common want to have a first right to buy the property and therefore pay off all, the other person's share of the mortgage and take over it? Or does the property sold? Technically, you're allowed by law to sell a tenants in common share. You're allowed to without the other tenant in common approving or anything. But who's gonna buy a half of a property with some other person on title that they don't know? So these things should be addressed in an agreement before title gets transferred to tenants in common.
Well, thank you so much for your expertise. Next week, we have a whole new topic for you. So thank you for joining us here. Raluca, thank you for your time. Always like, comment, and share, and see you next week.